Okay, so welcome to today's presentation, multi-timeframe technical analysis, understanding the bigger picture. So yes, on behalf of me and the FP Markets team, thank you for taking the time to be with us today. If you're new to technical trading, I'm sure you will find this of use. Even if you're a little more experienced, I believe you will still find use in analyzing multiple time frames, as it essentially allows you to view the markets through the bigger picture. Just so we all know who's behind the mic, my name's Aaron Hill, and I've been involved in the financial markets for more than a decade, largely focused on the technical side of things. I've also been part of the FP Markets research team for close to 2 years now. And yes, so look, before we get the ball rolling, I see the chat box is relatively, hi Daniel, is relatively empty. So I assume, yeah, good to see you again, Daniel. I assume the welcome slide is visible, and we can all hear me loud and clear. Yes, Daniel, I am working from home. Okay, excellent. Thanks, guys. Thanks for letting me know. So as usual, there will be a recording of this session available through our new normal routes, namely our FP Markets YouTube channel, as well as under resources on the main webpage. So, whoops. So as usual, let me just quickly run through the disclaimer on screen. Now, I just want to check that we can all see this. Yes, we can. Okay. The information contained in this material is intended for general advice only, and it does not take into account your investment objectives, financial situation, or particular needs. FP Markets has made every effort to ensure the accuracy of the information as at the date of publication. So look, as I say in every presentation I give, this is not investment advice. This is simply an educational session, so please do take it as such. To kick things off, the first port of call will be outlining what multi-timeframe technical analysis is. This will really help hammer home the definition for newer traders. Next on the menu, we will be looking at the practice of being able to read your traded markets using various timeframes. And then once we're familiar with how to work our way through various timeframes, the objective, of course, is to highlight higher probability trading opportunities, opportunities that are underpinned through a higher time frame perspective. And then, as usual, as for the Q&A session, this is where I will try to catch up with any questions I missed during the presentation and help answer and also help answer any fresh questions that may arise. As underlined in each webinar I give, for questions I miss, or if you'd like more detailed clarification, please consider emailing the research team at marketanalyst@fpmarkets.com. And look, this is also the email you can use to send across any ideas for future presentations and you'd like the team to cover. And I believe yes, there we go. The email is now in the chat box. So what is multi-time frame analysis? For those who've been trading or learning to trade for at least 6 months, will have likely heard of the term multi-time frame analysis, or sometimes referred to as a top-down approach. Now, do not confuse this with, shall we say, fundamental analysis, which involves pursuing a macro view of the economy and then essentially confirming this view with the country's economic indicators, which fall under the umbrella of leading lagging and coincident indicators. So look, multi-time frame, whoops, shouldn't have gone that far. Multi-time frame technical analysis is, if we're looking at things from the top, it consists of studying higher time frame structure and then observing the lower time frame structure to pinpoint trades. And this is how I analyze the markets, simply using a top-down approach. As you can see from the slide, we have a chart with 8 windows, which is the pound-dollar currency pair if you're interested. For newer traders present, the euro-dollar along with the pound-dollar and Aussie-dollar are some of the most liquid and widely traded currency pairs today. These are referred to as major currency pairs. Look, so although the slide contains 8 windows, with the monthly time frame, weekly, daily, H4, as you can see, H1, M30, 15-minute time frame, and the 5-minute time frame. Essentially, what we're looking to do is describe the higher time frame picture. So to use the higher time frame picture to help guide decisions on the lower time frames. Now, clearly, we do not have to go to the extreme of 8 windows. As you can see here, we have a chart made up of 4 separate windows. Again, this is the pound dollar. In fact, this is a chart from my daily market analysis, and this is what I use. So I use the weekly time frame, daily, H4, and H1. That's all I use. So as you can see, I use a combination of technical elements within the multi-time frame domain, consisting of, as you can see, supply and demand, resistance, traditional chart patterns. So the double top, as you can see here, the double top pattern that's formed on the weekly time frame. Bearish flag pattern, bullish and bull and bear flag patterns, ascending triangles, which we have one recently completed on the dollar yen, I believe, which I'll show very soon. I also use trend line studies. I'm also quite a fan of the simple moving average, the 200-day simple moving average, as that helps me define the trend, and also it can provide the dynamic support and resistance on the daily time frame. And as you can see here, I also use the RSI, which basically measures the strength of the traded market in terms of momentum, and can alert you to when the market is overbought or oversold or forming a divergence. I also use ascending triangles and obviously a Fibonacci structure. And also, in terms of support and resistance, I'm a big fan of the Quasimodo support and resistance. If you're interested in Quasimodo support and resistances or learning about them, we have done a handful of presentations on this, so please do check that out. You can find that under resources on the main web page. I believe it's under the previous, it will come under the previous webinars. Alternatively, look on YouTube and you'll find the videos there. So with that in mind, we can also use 4 windows, as I've just said. We can also use 2 windows. This is all trader dependent, of course. As you can see here, this is again the pound dollar, and to the left we have the daily time frame, while to the right we have the H1 time frame. Look, in this scenario, we could use the daily time frame to determine market direction, and the H1, shall we say, as our traded time frame. When I say market direction, I'm not only referring to trend direction. This may also be a structural bias. So what I mean by this is the daily time frame could simply be shaking hands with trend line resistance, as you can see here. And on the H1 time frame, to help confirm that trend line resistance, we have the H1 trend line supports experiencing recognizing a breach. So as you can see, we recognize the breach here and recognize the breach at this trend line support, as you can see. But we've also retested, when we've retested the underside of this trend line resistance here, this adds weight, in my opinion, for this area here. Okay, we have a question. Combination of multi-time frame analysis and EMA strategies are great. Okay, brilliant. If you could maybe detail that, how you look at the what kind of EMA strategies you look at, that would be good. Do you just basically look at the crossovers on the different time frames, or where we are, or a mean reversion or something like that? That would be good to know. So let me just, where was that? Okay, so look, just to recap, what multi-time frame analysis is, we can simply say it's the study of selected timeframes to help not only gauge market direction, but also guide entry and exit. So are there any questions other than the previous one on what we've shown so far? If not, I will move on. Okay. So now we understand the typical layout of charts and what multi-time frame analysis. Okay, we have a question from Nigel. What are the best time frames for small accounts using multi-time frame analysis? Nigel, we'll get to that. That's a good question. That's something I address in a few slides time, I believe. So what I do is I compare the different trading styles. So that might help you with that. If not, I will come back to your question. So as I said, now we understand the basic layout of charts within a multi-time frame setting. How do we go about reading markets in different time frames, which is, if you remember, is the second presentation topic. Just to be clear, the third topic, as you can see here, is to employ multi-time frame analysis to determine high probability trading opportunities. So what I'll do here is I'll try to merge these two together as we progress, because I think that would make it easier for any newer traders present, and help obviously avoid confusion. So to be able to read markets in different time frames, I believe it's really quite straightforward if you understand the basics of technical analysis. But before we can achieve this, an approach to navigate market structure is required. What I mean by this is a strategy. So you would have to have a good understanding of trendline structures, if that's what you're using in your multi-time frame setting, support and resistance. You'd have to have a clear understanding of these things before you can apply them to a multi-time frame arena, I guess you could say. So keeping things as simple as possible and not to lose any newer traders. The slide on the screen is of the euro dollar, and it's split into 4 windows, as you can see: weekly, daily, H4 and H1 time frame. And this is the setup I use on a daily basis. For the purpose of this structure, I'm going to focus just for the purpose of this demonstration here, I'm going to focus on just simple support and resistance structure, and let's see what we're left with once we're finished. So on the weekly time frame, we can see we are currently testing a clear support and resistance area, which, as you can see, has seen some bullish life over the past couple of weeks. Now, with this, we know where we're coming from. So bulls are starting to show some life within this area. So we know where we're potentially going to come from. With that, where are we likely headed? Now, this is again just on the weekly time frame. We're likely headed to, this is just my analysis, guys, of basic support and resistance. Forget everything else, just support and resistance. For me, I believe we are likely heading to this area here on the weekly time frame. Now, knowing this, moving to the daily time frame, keeping this in mind whilst looking at the daily time frame, we can see that on the daily time frame, we are actually testing a support turned resistance zone, where we have seen buyers and sellers go head to head over the past few days. But, and here's the important point to note, we know where we're coming from on the weekly time frame with room to rally higher. So what do we think the likelihood of, so what do we think is the likelihood of sellers being victorious here? Of course, we could see price continue to punch lower given the current downtrend we've been in. I understand this, but to keep things as simple as possible, with just the analysis of support and resistance, we would think buyers are likely to overthrow this area, judging on the higher time frame picture based on the weekly structure. And given this, if we override this area, where are we likely headed to on the daily time frame? Now, as far as I can see, we're heading to this area here, which is a clear resistance zone pointed out on the slide. Now, moving across to the H4 time frame. Now, keeping these time frames in mind, moving across to the H4 time frame, we can see price hit a support turned resistance. Now, do bear in mind that this support turned resistance actually is glued, I believe, to the lower side of this daily support turned resistance. So, with that in mind, we can let me just see what else I have coming up on this. Oh yes, and we also have a local, I term this a local resistance turn support. So what we have right now is price coming off of this H4 support turn resistance, which as we know is glued to the underside of this daily area. And we're now testing a local support zone. So what we have here, so let's just recap everything from these three time frames. What we have here is the weekly time frame telling us the currency pair is likely headed for higher levels out of this support. The daily time frame showing us that that resistance is in the fight, and the H4 time frame currently testing support. So we have support coming out of the weekly and the weekly and H4 time frames, though on the daily chart we have resistance. So where does this leave us on the H1 time frame in terms of just support and resistance zones? Well, as far as I can see, we are now range bound. This is right now. This is at the time of screenshotting this market, but clearly we are sandwiched by the H4 and weekly support at these points here at the bottom of the range, and as well as the daily resistance above. So with all this taken into account, there is a chance that buyers could come in from this range support. Look, I know that buyers did not come in from this range support, so I have checked the chart since. But the reason I kept this in the presentation is simply because I wanted you to get the idea, especially for newer traders. I wanted you to get the idea of how you can read the markets in different timeframes and gauge the strength and possible weakness from that type of analysis. So if this range support is removed, which I know it was, support on the H1 could come in around here. Now, I haven't checked if we did react off of this area. Let me just quickly check. I believe we have reacted off of this area going forward, which as you can see has a connection with the weekly support. So for me, it's no surprise to see buyers coming in from this area, given the additional reinforcement from the weekly support area up here. Right, so we have a couple of questions. Let me just see if I've got through all my notes. Okay, we have a couple of questions. Okay, we have a question from Freddie. How do I create these multiple time frames in MT4? Now, I'm not sure if you can do that, as in these type of, as in separating the windows. I know you can separate the individual markets, but I'm not sure you can separate the windows. There may be an an app or something like that for MT4, but I don't use MT4 for my analysis. I always use the TradingView platform. So I'm not sure on that, Freddie. Sorry about that. We have a comment from the kid. My read on the daily was it was heading to hit resistance, on the weekly. So a turn down. Near term is like go to the RSI. Yeah, see, look, go to the RSI for confirmations. The reason I've kept this as simple as possible, the kid, is to just to help newer traders present. That's all. I've kept this as simple as possible. I know there's other elements we could have included in this analysis, which I will go into very shortly. But it was just so I could give the demonstration of how to read the markets using one form of analysis. Could you do one on Brent? If there's time, Daniel, no problem. I'll go over to the Brent chart and have a look. So other than this, are there any other questions before I kick things over to the next slide? Okay, doesn't appear so. Brilliant. Okay. Okay. So as the title on the slide shows, I believe almost any technical strategy can benefit from a multi-time frame view of the market. Now, there we go. So when I say any strategy, I literally mean any technical strategy. So we got the Fibonacci ratios, which you'll see very soon on my own charts. I'm a big fan of Fibonacci studies, particularly Fibonacci clusters. You may, for anyone that follows our Twitter page, you may have seen I highlighted a Fibonacci structure on the pound dollar, which I'll show you very shortly as well. And they're just awesome. If it's in line with the higher time frame picture, that's absolutely fantastic in my opinion. But what I'm trying to say is if you have a Fibonacci ratio on, say, the weekly time frame, and a Fibonacci and some Fibonacci ratios in line with that that direction gauged from the weekly time frames Fibonacci ratios, then I think that's fantastic. But you can also use momentum studies, as one of the attendees just recently commented on. We can also use the RSI. I use the RSI. I know there's other momentum indicators available. So we can use the RSI on multiple time frames. So for instance, on the daily time frame, we could be overbought. On the H1, we could be crossing the 50 center line, which is essentially confirmation of the daily time frame's overbought signal. We can also use moving averages, trend direction, trend definition. So you can use the say the 200 period moving average or the 100 period moving average on the weekly time frame, the 200-day moving average on the daily time frame, and see how it all lines up. So this is to define where you are in the trend. But with that, you can also use trend studies in the terms of price structure. What I mean by that is look for higher lows and higher highs and lower lows and lower highs to define your trend. And this can be done on multiple time frames. For anyone that's familiar with the Dow theory, I think he does something very similar. If I remember correctly, he has the primary trend, which I think you can find on the weekly time frame. So it's the major trend, the primary trend, the secondary trend, which is the corrections within the primary trend, and these corrections can be found on the lower time frames. And then you have I believe it's called the minor fluctuations, which is the intraday trend. So you can find, so trends can be found on any time frame. And then we also have Bollinger Bands, which is a volatility measure. You can use them on multiple time frames, and then of course supply and demand, which is a price action concept. Any questions, guys? Please do feel free to fire them across. I can't see anything. I'm not sure if I've clicked this right or okay. Okay, could you do one? Brent can't. Okay, no questions. Okay, we have one. Can't we say that the weekly chart is going down? Remo, was that on the previous? Let me just quickly spin back to the weekly chart is going down. Do you mean here? Is this what you're talking about, this area here? Yes, we could. I believe we could. But as I said at the beginning, this was simply just to show the how to read markets in different time frames using one structure, nothing more. I didn't want to confuse anyone. It seems like I've confused everyone, trying to keep it as simple as possible. Let me just spin things forward. Okay. So with this, the ultimate goal of a trader is to pinpoint high probability setups and trade as objectively as possible. Look, we must also realize that no matter how much analysis we perform, how long we spend at the screens, you will experience losing trades. Let me repeat that. You will experience losing trades. Although this should be obvious, knowing that we will encounter losing trades and accepting this seems to be two different things entirely. I know this as it took me years to truly accept that I will get losing trade, to accept my losing trades. I knew that I would get losing trades, but it took me years to actually accept the risk, if you will. But the thing is, on top of losing trades, you have to accept that your bias was incorrect. So I've said it I've said it a number of times in previous webinars that losing money and being on the wrong side of the market is almost like a double whammy of hurt to the psyche. It's not a pleasant place to be in, and it takes years to actually accept this as part of the business. So just to be aware that while I would highly encourage any trader to try and include multi-timeframe analysis in their trading, it is by no means a guarantee that each trade you take will be a winner. In fact, I can guarantee you it will not, and that goes for every single method you look at. With that understanding, I'll switch things over to my daily market analysis, where the key theme is technical studies through a multi-time frame approach using the weekly, daily, and H4 and H1 timeframes. So just bear with me. Okay, there we go. I assume you can all see the screen. And this is so just before I focus on the technical structure of things, just a couple of points I want to make. There is a rule of thumb circling the web that timeframes in a multi-time frame setup should be a 1:4 ratio, meaning that say we're looking at the H1 time frame, the next lower time frame should be a 15-minute chart, and the next higher time frame should be, say, the H4. So we're looking at a 1:4 ratio. I guess it does make sense. Another point to bear in mind, and I think this relates to a question I had earlier, is trading style. Now, there are 4 trading styles that we work with. There is the position trader, there is the swing trader, there is the day trader, and obviously there's the scalper. So for a position trader, this is a long-term trader, more of an investment approach. You would probably be looking at the weekly time frame and maybe even the monthly time frame to gauge the bigger picture. And for an entry, and for your entry chart, your traded time frame, you'd probably be looking at the daily time frame. Now, for a swing trader, this is more medium term. And to gauge the overall trend or the overall structural bias, you can use the daily chart and maybe the H4 chart as your entry time frame, maybe even the H1 chart. It depends on how you feel with those kind of time frames. Now, for the shorter term traders, this is the day trader. I've seen Many look at the H4 to gauge the overall trend and structure. Some do look at the H1, but I prefer the H4 for the shorter term overall picture. And then you can, for your entry chart, you can look at the H1 time frame and maybe even the M30. For the scalper, now this is very, very short-term stuff, and for me, the overall chart should be the H1. I would be looking at the H1 time frame to gauge where we are in the overall picture, the H1 time frame. So I wouldn't go any higher than that. And then for the entry chart, obviously you'll be looking at very, very low time frames. So the M15, M5, and maybe even the M1. That's the 1 minute time frame. Now, okay, so going over this is my daily market analysis. For anyone that's a regular reader of this, you'll be familiar with my layout. So as you can see on the weekly time frame, we have prime support in play at 1473, 1583. Now this is the weekly time frame. Now if you're looking at the order flow perspective as well, below this higher low at this point, there would have very, very likely been a truckload of stops. When I say stops, I'm talking about sell stops. These are from both traders that have attempted to buy into the market from this point here and place their stop below the most obvious low. So that would be a sell order once filled. And there's also breakout selling interest below this low as we broke through this, as many traders quite rightly would be looking for further underperformance, given that we've broken a clear higher low to the left. But with that, we've actually traded directly into prime support. So there have been traders attempting to buy into that selling momentum. So this is what's happening right now. Things are not looking too great at the moment, I agree. And before we make any sort of headway out of this area, we're going to need to see this Quasimodo support term resistance at 1689 on the daily time frame, and even better, the trend line resistance. And this was taken from, I believe, the high 2254 taken out. And this would leave us room to potentially make a run for the 200-day simple moving average, and that comes in at 1906. Now, as you can see, we've determined the higher time frame picture from both the weekly and the daily time frames. Also, with the RSI, we have tested the 50 center line, and we have come off of that area. So we are forming resistance, and that gives credibility to sellers, as remaining below the 50 center line essentially tells us that the average losses are exceeding the average gains, because the RSI is calculated is a comparison, if I remember correctly. It compares the up days and the down days and then forms a ratio. So what we're seeing here is the ratio whereby the sellers are out, the average losses are outweighing the average gains. So this favors further downside on the daily time frame. Well, I did say in the recent analysis, we are range bound at the moment, and this could have something to do with the ECB meeting that's due today. We are range bound on the H4 and also the H1. We're currently testing the Quasimodo support on the daily time frame at 1584, and that's the lower edge of the range. There's not really much I can really gauge from this market right now. You see, we've got indecisive buying from the weekly support. We've got not really much to go on the daily time frame. You could say that it's highly likely that we're going to break this prime support, given the lackluster buying and the clear break of the low. That's certainly a possibility. But you know, I'm not really keen on this market right now. So look, clicking over to the Aussie dollar, you can see by looking at the weekly time frame, we've come off prime support. You know, Aussie dollar bulls have cheered a move from late September from this prime support on the weekly time frame at 69.68, 72.42. With that, we still have room to rally, according to my technical markings, to prime support at 74.89, 75.99. So going by the weekly time frame, we have room to move higher. Moving down to the daily time frame, there is a resistance area made up of a number of technical structures, which includes Fibonacci, the 200-day simple moving average, and a Quasimodo support term resistance. And that comes in between 76.21, 75.51. Now, interestingly, this hasn't been tested yet. It came very close last week, but this is clipped to the lower side of this prime resistance. So this daily resistance here is clipped to the lower side of this weekly area. So that's something to bear in mind as we move to the lower time frames. Also, the RSI on the daily time frame is overbought. Now, that does not necessarily mean we are turning lower. The RSI can remain overbought for a prolonged period. Many traders look for the RSI to reach oversold and then exit the area before committing to a position. Something else to bear in mind, obviously, is the indicator resistance at 74.80, which is yet to be tested. That's within the daily timeframes overbought RSI. Now, with knowing we have room to essentially punch higher on the bigger picture, what are the chances of this 1.272% Fibonacci extension holding? Now, as you can see, sellers did try to make an entrance from this area, but it's not really giving us much to write home about. And as you can see, sellers are really lackluster at the moment from this area. I did actually note in the daily market analysis to watch this point here. Let me just mark that up so we can all see this point here where we intersect with support at 74.41 and a trend line support. So if we dropped back to this area here, this could be an ideal time to be looking for dip buying opportunities. Now, this is all in line. Bear this in mind. This is all in line with the bigger picture. You see, weekly time frame, room to move higher. Daily time frame, still have some room to move higher. So with this, there's a good chance we are breaking above this 1.272% Fibonacci projection. But also bear in mind, we are in a reasonably strong uptrend since pandemic lows of March 2020, and we can see that on the weekly scale. So the reaction from this area could simply be a major dip buying attempt and could see us overrun this prime resistance. That's on the bigger picture. Knowing that, we are likely to break above here. A pullback to a retracement back to this area would be absolutely fantastic, with some reaction which could see price continue higher. Now above here we are looking at the 75.99. I believe this was a Quasimodo resistance. Now let me just straighten that chart back up. So with that, I believe I said in the market analysis we are likely to overthrow this decision point here and head for this decision point here. This is on the H1 time frame. So knowing all of this from the weekly, daily, and H4, there's a good chance we are holding this. So look, this 75 figure, it should be no surprise that this is holding as support, because we know weekly, daily, and weekly, daily, we have upside direction. So seeing this 75 handle hold it should not be a surprise. So with that, we are likely to overthrow this decision point eventually, maybe, and approach this H1 decision point at 75.85, 75.67. which I believe is also set within the daily resistance here. So this makes it for an ideal target. Now, are there any questions regarding this? I may have gone a little bit too fast with this, but I hope you can understand what I'm doing. I'm simply looking at the bigger picture and trying to get some form of direction, not only with trends, but also with the structure that I've applied to the timeframes, and then working out where I can potentially find an area of entry on either the H4 or H1 timeframes. An area of entry should ideally offer confluence. So like this area here, the support at 74.41 and trend line support. This is a lovely area. I'm sure there's some trend line, some Fibonacci confluence at this area as well. Okay, moving over to the dollar yen. This is a very interesting time frame recently. As you can see, we have recently shook hands with the resistance. This is the weekly time frame at 114.38. Now, knowing we're coming off resistance on the weekly time frame, and last week's move snapped, I believe it was a five-week bullish phase. There is a chance we have room to retrace back to support at 112.16. Now, knowing that, we could see a bearish move emerge on the lower time frames. Now, connecting closely with the weekly resistance was a. Let me just enlarge the chart so we can all see where I'm talking about. We have a 1.272%. Oh no. Yes, 1.272% Fibonacci projections converging around the 114.60 area. And this is just below a 78.6%, as you can see here, Fibonacci retracement. Now, with that resistance and the weekly resistance, as well as the RSI coming out of exiting overbought, this is a bearish picture in terms of the structural bias. However, in terms of the trend, we can clearly see we've been higher since the beginning of this year. So for me, there is room to the downside on the dollar yen on the big picture for now until we reach the supply turn demand at 112.66, 112.07. So with knowing this, we recently had an ascending triangle break on the H4 time frame. So for anyone that follows patterns will probably recognize this. With the profit objective reached at 114.62. I believe this was reached, yes, last week. What was beautiful about this was it converged with the profit objective. So any breakout buyers here were, what's the word? Were trying to think of the right word here, were encouraged, encouraged to take profit at this area, because we know we're coming from the huge weekly and daily resistance confluence, as well as the RSI being in oversold. Now, with that, you can see we have made a sizable retracement. And that was to be expected, given that this converged with the higher time frame structure. Now, we also have broken a trendline support, which means we could be in for lower prices, down to support at 112.63, 112.25. Now, are there any questions? I see it's gone very, very quiet. I hope I'm not confusing anyone here. Okay. So look, moving just over to. Oh, so with this, I remember from my market analysis, I am now looking at the 114 level as a possible resistance. Given the whole picture, we're coming from the weekly and daily resistance, and we've recently broken a H4 trendline support. Knowing this, we've also actually, I think, in recent price movement, we're in the process of forming a. Yes, so this also converges with, assuming we continue higher, this also converges with a 100% Fibonacci projection at 113.98. So the confluence here, I'm pretty sure there's more Fibonacci confluence here as well, guys. Let me just bear with me. Yes, we have the 61.8% as well. So we have Fibonacci confluence around the 114 level as a resistance. Along with the overall picture pointing to the downside, so room to move lower on the H4 weekly and daily resistance. This just makes sense to be looking for selling opportunities around the 114 area, according to this analysis. Now, finally, on to the pound dollar. We have formed a double top pattern on the weekly time frame, and we did probe below supply turn demand at 36.29, 34.56. Now knowing we have all of this, I am still bearish on the pound. I know the fundamentals do point to the upside right now, but technically this chart shows that we could be heading lower to potentially to the double top take profit target, which is around the 130 region. And this is sort of confirmed right now with the daily trend line resistance and nearby 200-day simple moving average, with room to, this is the daily time frame, guys, we could be moving back down to the 36.02 area. And also in conjunction with all of this, we have had a trend line support breach on the H4 time frame after forming a top above the 1.272% Fibonacci projection at 38.39 with room to move to support. So with all of this going on, we know we're in a pretty much a bearish picture from a technical standpoint. Now, this was the Fibonacci cluster I highlighted yesterday, and we bounced from this area nicely, and this is set just above the 137 figure. Now, with this, with knowing all of this, knowing this picture, again, I would probably be looking at the 138 figure as a possible resistance. If we fail to reach this area, which we may well do, and break below here, there's potentially short-term selling opportunities from below the 138 region to the H4 support at 36.57, just going on this whole picture. Now, guys, are there any questions? Everyone's gone really, really quiet. Maybe I've confused everyone. But let me just spin things back to the slides. Okay, are there any questions before I wrap things up? This is really, really quiet. I hope what I've shown here makes sense, because I tried to start off with a very basic. Okay, we have a few questions here. Sorry, I didn't see them. And why did you put an indicator on the daily time frame only? Nigel, that's simply because I'm comfortable with that. Look, you can have, there's nothing wrong with having the RSI on the weekly time frame and the H4 time frame and the H1 time frame. That's totally up to you. What I don't really agree with is having the RSI, the MACD, and the stochastics on one scale. Although I know some traders do that, for me it just shows the same thing, and I'm a big fan of the RSI, so I just keep it very, very simple on the daily time frame. Nothing more than that. Nothing more than that. And the 10-year yield in America is creeping up, yeah, as bonds dip away. Yeah, thank you, Daniel. We have another question. Any more questions? Okay. Are the majority of professional I've lost it. I'm sorry, guys. I keep losing your questions. Are the majority of professional traders using multi-timeframe analysis? Do the majority of retail traders use multi-timeframes? Now, to answer the second part of the question, I don't believe a lot of retail traders use this. I would hope they would. Because trading in isolation, trading on just the H4 time frame. So, for instance, this is the dollar yen was a good example where we bought above the ascending triangle, and we took profit at the traditional take profit target, but knowing that the dollar yen is in an uptrend, which you'll see from the H4 time frame, you would have been caught out there. She would have been expecting more, but knowing that we had weekly and daily resistance in play, there was a good chance that strong selling was going to come in, and it did. Are the majority of professional traders using multi-time frame analysis? I'm not sure if you're talking about the institutional traders or excuse me, or the professional retail traders. If you're talking about professional retail traders, I can assure you that they do. As in terms of institutional traders, they're more of a macro. I believe they look at the macro picture and use technicals as entries. in some organizations. I'm unsure if they use multi-time frame analysis, but I from the bank traders that I've spoken to, they do use Fibonacci concepts in terms of their technical approach, as well as look at the higher time frame technical picture. So I'm unsure on that one, to be honest. Okay, look, we don't have any more questions, so I assume everything is all good. So this is pretty much all we have time for today. Thanks again for taking the time to join. I really hope you were able to walk away with slightly, as I say in all my presentations, slightly more informed than when you joined. As we look to close out the month of October and enter November, we have some really, really cool webinars to look forward to, including a webinar on the the factors of behind trading success, and that's on the 4th of November, which I believe is a Thursday. Excuse me, guys. And then a presentation on the wonderful yet somewhat complex world of harmonics. Now, when I talk about harmonics, I'm talking about harmonic patterns. And that's on the 11th of November, which again, I believe is on a Thursday. So be sure to register for those. Any comments, or as you can see, any comments or feedback, please do send this to marketanalyst@fpmarkets.com, or alternatively support@fpmarkets.com. So with that, have a great day, and I'll see you all again very soon.